Good afternoon, ladies and gentlemen. I'm Kritika, moderator for the conference call. Welcome to Q3FY22 earnings conference call for Bigbloc Construction Limited. As a reminder, all participants' lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone telephone. Please note, this conference is recorded. I would now like to hand over the floor to Mr. Karan Thakkar from Essentials. Thank you, and over to you, sir.
Yeah, hi, good afternoon, everyone. This is Karan Thakkar, and on behalf of Essential Technologies, I welcome you all to Bigbloc Construction Limited's Q3 and 9 months ended earnings conference call. From the management, we have Director and CFO, Mr. Mohit Sabu. I would request you to refer to the investor presentation that has been uploaded on the exchange, which will throw much more light. And starting with the statutory declaration, so certain statements in this con call may be forward-looking. These statements are based on management's current expectations and are subject to uncertainty and changes in circumstances. So these statements are not guarantees of future results. Now may I request Mr. Mohit Sabu to take us through his opening remarks, subsequent to which we can open the floor for the Q&A session. Thank you, and over to you, Mohit ji.
Good afternoon, everyone. Welcome to the Q3 and 9-month earning call for Bigbloc Construction Limited. Firstly, I'd like to thank all of you for joining this call. Let me start by introducing you about our company, Bigbloc Construction Limited. We are engaged in the manufacturing of AAC blocks, which is also known as fly ash blocks. So this is a green building material which is used as a direct substitute for red bricks. Majority of the raw material used in manufacturing of this product is fly ash, which constitutes almost 65%, and there are other materials like cement, lime, gypsum, and many other materials, which are for adding the strength to the material. So, involved in this manufacturing since the last 12 years, and currently we have an installed capacity for manufacturing AC blocks of 5.5 lakh cubic meters per annum. This is spread across 2 locations, Umargaon, which is near Vapi, from which we are catering to the markets of Bombay, Pune, Vapi, Navi Mumbai, and all such regions. And this plant is in the parent company Bigbloc Construction Limited, whereas Bigbloc Construction also has a wholly owned subsidiary, which is by the name of Star Bigbloc Building Material Private Limited. And the plant of this company is located near Ahmedabad at Kapadwanj with an installed capacity of 2,50,000. So the combined capacity is 5,50,000 cubic meters per annum, and we are the largest manufacturers of blocks in Western India. About a month back or so, we have signed a JDA with Siam Cement Group, which is one of the largest of Thailand, and they are ranked at 641 in Forbes list and have a presence in more than 21 different countries. They are into various businesses involving constructions, cement, and as well as some chemical businesses. So this is their first investment which they have committed to do in India, and this JV is done for setting up of a new plant for manufacturing of C panels, which is autoclave lightweight panels. So this is again a green building material which will be for faster construction and an advanced material. This marks their first investment, and we are also looking at further growth by joining them. The last quarter has pretty good overall looking at the entire real estate scenario, and as we have seen...
Your conference is no longer in lecture mode.
Hello?
Your conference is now in lecture mode. Only chairpersons will be heard.
Please go ahead, sir.
Yeah, so looking at the last quarter, all the real estate companies have seen tremendous, And that is why even we have witnessed overall a very good quarter with phenomenal numbers. And in the last quarter, as we can see that the turnovers have almost gone up by 52%, and the EBITDA margins have gone up by 73%. The turnover has gone up from 35 crores to 3 crores. That is basically because of the increase in selling price, that is better realizations, and also because higher capacity utilizations. Moreover, in the last quarter, we have done some debottlenecking at our unit, because of which the capacity has been increased by 10% at the Umargaon unit, 300,000 to 330,000 cubic meters per annum. And this has been done at a minor capex. Also, the EBITDA has gone up from 4.3 crores to 7.4 crores, and the PAT has gone up from 1.6 crores to 4. Also, we have shared the investor presentation in the press release, the exchange website. And now I think we can go ahead by taking the questions from the investors.
Thank you, sir. First question comes from Anil Thakkar from Jalan's Advisors. Please go ahead.
Hi, Mr. Mohit. Congratulations on a good set of numbers. I have a few questions. The first, I would like to know about what was the price range AAC blocks and Z bricks during the last quarter, and what is the future outlook.
So this product is sold landed at site to the customers, and an year back the price of AAC blocks was around 2,800 to 3,000 rupees a cubic meter. And right now in the last quarter the average selling price has been somewhere around 3,700 to 3,900 rupees a cubic meter, which is further gone up on an average currently to almost 4,000 to 4,200 rupees a cubic meter.
So this 4,000 to 4,200 per cubic meter for AAC blocks plus GST, right?
Yes, plus GST. And from that, if we compare this product to pricing of red bricks, then earlier the pricing of red bricks used to range of 2,000, 2,200 rupees a cubic meter, which recently have gone up to almost 4,000 to 5,000 per cubic meter depending on the markets, because transport forms a very big element in red bricks as well as in AAC blocks. Earlier, red bricks used to be cheaper as compared to AAC blocks when you correct it, when you directly. But now the pricing of AAC blocks is cheaper as compared to red bricks on a peer-to-peer comparison.
Okay, so what I understand is, red bricks is around 4,000 to 5,000 as of now, and AAC block is around 4,000 to 4,200, which is currently prevailing.
Yes.
Okay. What was our production during the last quarter?
So we had almost 102% capacity utilization after doing the debottlenecking at the Umargaon plant quarter.
Okay, so it was around 5.4
together.
Sorry?
That is the consolidated utilization for both the units combined together.
Okay, sir. And now we have a decent sort of increase in our EBITDA margin. So would love to know, how much of out of that was because of increase in price and sales increase, and how much was because of quantity increase.
So the capacity utilization in the last quarter stood at almost 91-92%, which has gone up to 100%. So 10% has increased because of capacity utilization, and rest because of selling price increase.
Okay. So what was the last quarter's average realization?
The last quarter average realization, as I mentioned, was somewhere around 3,700 to 3,800 rupees a cubic meter on an average.
Which is around 4,000 to 4,200 this time.
Yeah, somewhere around 4,000 rupees a cubic meter.
Right, sir. Now, what would be the, we have started with, done this tie-up with Siam. So what would be the margin profiles there?
Sorry, can you come back on the question again?
See, we have, tie up with there's a new company for AAC panels, right?
Yes.
So have we got any sales for that or no in this quarter ended in December?
So recently we have just announced the JV, and as I mentioned, we set up a new plant altogether with SCG, and in that particular company, it will be a new company in which will be holding a 52% stake, and SCG will be holding a 48% stake.
Right. So this particular December quarter's sales does not include any sales of panels, right?
So it does not include any sales of panels, and that comes under incorporation, and we are in the process of identification of land and negotiating with the machinery suppliers simultaneously.
Right, sir. Now one more question, we have been growing really well over past one and a half years. So we already have 102% capacity utilization. And as I understand, putting up a block factory, new block factory, AAC block factory takes at least, a year and a half. So how do we plan to grow further? Because we do not have, any new factory as of now. So are we going for a greenfield project expansion or brownfield expansion? How are we going to increase our sales?
See, for the same, as I mentioned, that we have recently signed up this JVA with SCG, in which a new plant will be established altogether. And apart from this, we are looking at various other expansion options for our existing setup as well for manufacturing of AAC blocks, and they are still under consideration, but we don't have any concrete information as of now for this.
That is what I was worried about, because we are already at maximum capacity utilization. So if we have not finalized anything new, so maybe I will say that for next 1.5 years we will not be able to increase our sales because of quantity. There can be increase in prices, and because of that we may increase our EBITDA or net profit, but we will not be able to increase our quantity output, right?
Yes, our full utilization right now. So without additional capex, the top line increase can be because of better realizations. And as I mentioned earlier, that we are looking
on demand and supply base increase.
Yes, the demand is phenomenal, and the real estate sector is booming. Conversion demand from brick to block is now happening very fast.
So don't you think we are, caught, I'll say we are caught in a situation where we have demand, but we are not able to increase supply. So don't you think, we will have to act faster because of, excess demand? Because
we are under consideration of lots of things, but nothing is commercially finalized yet. And we are looking at capacity expansion in 1 or 2 quarters itself.
Oh, right. And how much time does it take for, maybe a greenfield expansion or a brownfield expansion?
So a brownfield expansion can be completed in about 3 to 4 months, and a greenfield expansion will take almost 8 to 10 months.
Right. So, and any capacity utilization, capacity increase being done by competitors?
At the current, in the competitors also, there is no capacity expansion planned so far which we are aware of. But we ourselves are looking at as well as greenfield expansions, to be very frank.
Right. And what would be the capex for that?
So to install 250,000 cubic meters, we might be able to do a brownfield expansion at a capex of 25 to 30 crores, whereas for a greenfield expansion, the capex might go up to 40-45 crores.
Okay, right. And what would be the expansion? The capex for the panels wherein we are in JV?
For the JVA, the total capex for one plant would be approximately 70 to 75 crores. And for that, we are still under company permission, and thereafter we'll do the debt syndication as well as the promoter contribution of.
Right, sir. And about the, AAC block, particularly for greenfield and brownfield, what would be the capital structure like? It will be from internal funding, so it will be from debt, anything like that?
So we'll be looking at a mixture of debt and equity, and if we get across some good investor, then consider the same for a long term.
And the last question, if I just can squeeze in. about, we have a wholly owned subsidiary which is taking care of Papadwanj plant, right?
Yes, that's right.
And the Umargaon one is, the holding company. So any particular reason for, creating a holding and subsidiary structure?
So the Ahmedabad plant, which is Star Bigbloc in the subsidiary, so this was a sick unit which we had acquired almost 3 years back, and there are some accumulated losses and depreciation in that company, because of which we are ending up saving on our taxation every year. And that is the reason it is still running in the subsidiary company, and we have not done a merger for the same.
Okay, so we expect in future once, the losses are recovered, we may, merge both of them.
Yeah, we are looking at that option as well to merge the company together in the upcoming couple of years.
All right, I understand. Thank you very much, sir. That clarifies all my questions. Thank you.
Thank you.
Thank you, sir. Ladies and gentlemen, if you have a question, please press star and 1 on your telephone keypad. Next question comes from John Matthew from John Invest Corporation. Please go ahead.
Hi, am I audible?
Yes.
Hi, thank you for the opportunity. So, how do you see the brick block pricing movement? Will it sustain, or do you think that you see them moving northwards? Second, how are we planning to ramp up our marketing and advertising activities?
So regarding the pricing, as I mentioned earlier, that earlier the pricing of red bricks was much cheaper as compared to AAC blocks. But in today's time, AAC blocks is directly cheaper as compared to red bricks, apart from the structural advantages and everything that AAC blocks offer. And looking at all those things, currently red bricks in the price range of 4,500 to 5,000 rupees a cubic meter, we definitely see an uptrend because the demand and everything for this product is increasing continuously. And if we see market share of AAC blocks as compared to other walling materials and everything, so in the walling materials, almost 85% of the market share is commanded by red bricks so far. AAC blocks contribute almost around 12% or so on average, and other building materials, which includes concrete blocks or Maivan structure and everything, they constitute almost 3%. So looking at all that, the demand scope is also conversion, because of the conversion demand, is phenomenal, apart from the real estate growth and infra growth that the government is also concentrating on. So we definitely see the pricing to go northwards, or at least to sustain easily in the current scenario.
Okay. And what about your plannings, in order to ramp up the marketing and advertising activities? Can you throw some light on that also?
So this more or less the product has in majority of the big markets like any big city, which includes Bombay, Pune, Surat, Ahmedabad, Baroda, Indore. This is a commonly accepted product. So it's and the demand is much more than what the current supplies and everything is. But in spite of all those things, we are having a good network of dealers as well as distributors and builders. And we keep on doing some quarterly marketing activities with all of them, which includes the likes of, giving some branding things to them and everything, which is just for the brand promotion. And we are currently supplying to lots of big builders, which includes the like of Lodha and Runwal, BG Shirke, as well as Shapurji Palanji, Mahindra. And looking at all them, the market has improved a lot for the organized players in the industry in the last couple of years because of COVID and everything. And that is how we see that, we'll keep on getting repeat continuous orders from them as well.
Great. Thank you. Your answers are helpful, and congratulations to you on the good set of numbers.
Thanks a lot. Thank you.
Thank you, sir. Next question comes from Somil Mehta from Mehta Advisors. Please go ahead.
Hi, sir.
Hi.
Pardon me if I must have missed your earlier answer, but could you please reiterate what you mentioned in terms of capacity utilization, especially for the fourth quarter? Like, how do you see the quarter? Are the utilizations going to be same, or how is it going to be?
So the installed capacity that we currently have at Umargaon unit is 300,000 cubic meters, and we did some debottlenecking in the Q2 at that particular unit, because of which the capacity has gone up from 300,000 to 330,000 cubic meters per annum. And the utilization for Umargaon unit in that particular aspect was almost at 100% as per the debottlenecked capacity. And for the Kapadwan unit as well, the capacity installed is 250,000 cubic meters, and the utilized capacity was somewhere around 97-98% for the Ahmedabad unit as well. So the last quarter was almost at full capacity utilization.
Okay, and we believe this is going to continue going forward in the next few quarters?
Yes, this should continue going forward, because the demand scene is phenomenal, and overall the real estate sector is also witnessing promising growth. And with the Navi Mumbai airport coming up, and lots of infra projects and everything also coming up in regions like Bombay, we see phenomenal demand from that region, as well as Gift City coming up near Gandhinagar, and the conversion demand also happening because of conversion from bricks to blocks. So demand has been phenomenal in markets like Baroda and all, which used to be predominantly supported by bricks.
Right.
Yes.
Okay. And just another quick question. The other income slightly stood out. What does this other income component include? The amount last year was quite high as compared to this year. Could you just please shed some light on that?
So the other income figure, just give me a second.
Yeah, no problem.
Thank you, sir. Next question comes from Mukesh Kotari from Individual Investor. Please go ahead. Mukesh Kotari, please go ahead.
I think Mr. Somil Mehta was still asking about the other income.
Yes, sir. Unmuted.
So I'll have to go a little bit more in detail for the other income, but it would include some income received because of delayed payments and interest incomes and everything itself.
Okay, okay.
Shall I move on to the next question, sir?
Yes, you can move on to the next question.
Sure, sir. Next question comes from Anil Thakkar from Jalash Advisors. Please go ahead.
Yeah, thanks for taking my question. Somewhere I had read that we are doing contract manufacturing for ACC also. That's right.
Yes, so we are doing contract manufacturing for ACC as well as Ambuja Cement. At the Umargaon unit, we have a tie-up with ACC, but their quantities are very less, to be very frank, right now. And at the Ahmedabad unit, which is Star Bigbloc, we have a tie-up with Ambuja, and for them we are doing almost 5 to 10% of our installed capacity as contract manufacturing in their brand name.
Okay, and margin profile will be not lesser as compared to normal margin profile, right?
Yes, margins are similar for selling to Ambuja or ACC both, because they are further able to sell their products at a higher margin as they are selling the products in retail markets because of their distributor networks and all, and their reach and all is much more than to the small villages and towns where we personally are. It's very difficult for us to reach.
So is there any quantity confirmation or quantity number kind of assured quantity that we have to supply or they have to take from us?
There's no such quantity commitment from their part or from our part, but ACC we have started doing contract manufacturing since the last 6-7 months, whereas with Ambuja we are doing on an average since the last quarter to 2 years. And Ambuja has been gradually increasing their quantities. They started with 2-3% and have reached up to 10-12% also.
Right. So, that we selling directly to maybe a real estate constructor or a dealer. So the margin there will be much better for us as compared to directly supplying to Ambuja, right?
No, margins, whether we are supplying to Ambuja or directly to the end customer, whether it's dealer or distributor or builder, our pricing we have kept for Ambuja also in such a way that our margins are on a similar level. Because Ambuja is able to sell their products in retail markets at higher pricing as compared to what we are selling in the commercial markets.
All right. And what has been the raw material prices over the last quarter or maybe this quarter also?
So over the last quarter, there has been a nominal increase in the pricing of few of the raw materials like cement and lime. Whereas the energy cost has gone up by almost 30-40% because of the significant rise in coal energy cost, coal pricing mainly. But majority raw material, 65% is fly ash, which is free of cost. We just have to bear the transportation charges for the same. And that is the reason that it does not impact a lot that way.
So we are collecting fly ash from the, what is the radius for a Kaparvan plant and what is the radius for a Umargaon plant that we, generally get fly ash?
So for both the plants, fly ash is located at a distance of almost 50 to 60 kilometers. For the Umargaon unit, the fly ash comes from the Adani thermal power plant at Danu. And for the Ahmedabad plant, the fly ash comes from the Wanagbori thermal power plant. And the quantity, huge quantities are available as we are using pond ash.
Okay. And how about, calcine gypsum prices?
Sorry?
Calcine gypsum we would be using, no?
It is a very small quantity and the pricing of gypsum has almost been similar. I think there might have been a 2-3% rise in the pricing of the gypsum in the last quarter maybe.
Right. That answers all my questions. Thank you.
Thank you.
Thank you, sir. Next question comes from Mukesh Kotari, an individual investor. Please go ahead.
Yeah, hi. Thanks for the opportunity. I just want to understand the product differentiation in terms of the construction technologies that is being used. Like, for example, you have Mivan technology. You have hollow blocks. And then, the traditional way of concretizing and then doing it. How different are we and how competitive are we in terms of product substitution that is available in the market today?
So, as I mentioned earlier, that if we see the walling material market, then red bricks, which is the traditional construction technology, is still dominating the market with almost 85% share, which used to be 95% around 6-7-8 years ago. Whereas AAC blocks, which used to be around 4 to 5% almost 6-7 years ago, has gone up to almost 11-12% currently. And if we compare with the technology of Mivan and everything, Mivan again is much higher in costing, and similar is hollow blocks. So this AAC blocks, the special characteristic of this product is it is governed by IS norms, and the weight of AAC blocks is 1/3 that of a brick. Because of it being such lightweight, the dead load on the building is much less, and because of that, the structural requirement of steel and everything goes down drastically. Secondly, AAC blocks almost 9 times that of a brick, so the number of joints in the building will be much less, thereby reducing the consumption of mortar which is used for joining the bricks or blocks, and also the labor cost will go down drastically. And if we compare with the global markets and all, so China has more than almost 3,500 AAC blocks plant, whereas India has just around 150 to 200 plants of AAC blocks which would be currently installed and running. So looking at all those things, it is still one of the most likely technologies for construction in our country, and looking at the weather dynamics also that our country has. So AAC blocks has this characteristic that when it's hotter outside, it will be cooler inside because of AAC blocks, because of the thermal insulation capacity.
Okay.
So looking at all those characteristics of the product, it is one of the best construction materials available in our country currently.
Understood. So what is the adhesive that is being used to connect to AAC blocks? Traditional cement. traditionally to connect red bricks use cement or similar such thing. So what is it used for AAC block?
So along with AAC blocks, we are even selling block jointing mortar and ready-mix plaster. So block jointing mortar is the chemical which is used for joining AAC blocks.
Okay.
Instead of the traditional method of using sand and mixing sand and cement, these days we directly get a bag in which a mixture of these chemicals is coming. And the builders are also preferring to buy this as they get it together with the blocks and their work is not hampered because of small material.
Understood. So, are there, so you supply this plaster material or are there, you source from somebody else and then supply along with the block?
At construction chemicals, currently we are outsourcing selling.
Okay.
But in the future, we are even exploring the opportunity of, introducing more construction chemicals as well as starting manufacturing of our own for the same.
Okay. So you're saying in terms of cost per square feet, the cost is much lower using AAC and the plaster as compared to other technologies out there.
Yes, and also if we look that, AAC blocks is a smooth finish product. So generally on the interior walls, people don't end up doing plaster. They just do putty and start the coloring work. Whereas for bricks, because it is a rough finish product and there's no evenness in the walls, for bricks, plastering is compulsory.
Okay. How about life of the building? Comparatively between these technologies?
There are no issues or no challenges, frankly, because this is that way not a new product for India, because there have been plants like Siporex, which is the oldest plant which is running in our country since the last 30-35 years. And they have been supplying the products to lots of builders and also to lots of MADA projects as well.
Okay, fine. Just one final question. For the cement company to add a value-added product, they can do forward integration. Fly ash, as you said, is like not very expensive, and the cost of putting up the whole plant is also not very high. So why can't cement plants do forward integration and come up with AAC products directly themselves?
See, frankly speaking, the capex and everything for this plant for a cement company is very small and very minor. But looking at the entire working and running of the plant, so we, on an average, every day we have a movement of 70 trucks inside one factory, which are used for getting cement, lime, fly ash, aluminium powder, everything, as well as for supplying goods. So almost that is 50-50%. So 30-35 trucks inward movement and 30-35 trucks outward movement. And as you mentioned that, cement giants like Ultratech had set up a plant in Wada, somewhere near Bombay. But out of some or the other reason, they were never able to get the right product out. And after running the plant for almost 1.5 years, they have just shut down their plant and started contract manufacturing. And looking at the likes of examples from Ultratech, Ambuja and ACC have come to the terms that they don't want to get into manufacturing of these products, and they are keeping all the building materials under their branding itself, and that's why they have started doing contract manufacturing from us or other AAC block manufacturers.
Okay. And I also understand, this product like cement has very limited circle to which it can be supplied because of the nature of the product. Am I right?
Yes. So what happens is the capex for one plant is almost, as I mentioned, almost 40-45 crores minimum. And the logistics during cost turns out to be very high, because if you go at a distance of more than 250-300 kilometers, then the cost of product will be much more, and it will be difficult to compete with red bricks in that case.
Understood. So in terms of expansion, would you look at moving away from the current focus of being in the Western market to other markets as well, so as to capture the market across India? Or what would be the strategy?
See, currently we are we are the largest in Gujarat and almost the third largest pan-India. And with this JVA with SCG, we will become more or less the largest in India. And we, in the long term, have a vision of becoming the largest manufacturer of AAC blocks in India with having a pan-India presence.
Okay.
That's what the long-term vision is, which we intend to achieve.
So geographically, you would want to continue in Western India only.
Actually speaking, it's not intentionally that way, but when we purchased Ahmedabad unit, we were looking at an expansion to set up a new unit, greenfield altogether near Bangalore, somewhere near Hosur, from which we would have been able to cater to the markets of Bangalore and Chennai. From Hosur, Bangalore would have been at a distance of 100 kilometers, whereas Chennai would have been at a distance of 250 kilometers. And we had done the necessary land identification and everything. But thereafter we came across the SIC unit near Ahmedabad, which was a 2 lakh cubic meter capacity plant, which we got at a very good price. And that is the reason, instead of going to altogether a new location, we decided to buy out that plant outright and get it under Bigbloc. But yeah, we do look at entering other markets as well. And I think Bangalore, being one of the most developed real estate markets in our country, is also on our radar for the same.
Thanks a lot.
Thank you.
Thank you, sir. Next question comes from Anil Thakkar from Jalanj Advisors. Please go ahead.
Yeah, hi. You just in the last question you mentioned that Ultratech had a plant somewhere near Wada, which is near Mumbai, and they have shut down the plant within 1.5 years, right?
Yes, that's right.
That was 200 square cubic meters of capacity.
Sorry?
That was the capacity of 2 lakh square cubic meter, right?
Yes, that was 2 lakh cubic meters capacity.
So that plant is still, not working, or somebody has taken up the plant?
Frankly, that plant is currently shut, and I'm not sure what a company like Ultratech has an intentions of the same. But it is not working right now. Ultratech is currently, they had spoken to us also some time back for contract manufacturing. But since we were already doing for 2 brands, and then it gets very difficult to manage lots of different brands at one particular location.
Right. Now, the only reason of asking is, it can be one of the opportunity for us that, we can take over the plant. Nothing else.
Yeah, frankly speaking, we have that, we thought about that, but buying something from a company like Ultratech again is not very simple, to be very frank.
Mm-hmm. Because, we are losing a lot of opportunities of sales because, we don't...
We are exploring other opportunities. There are a few other SIC units which we are under consideration and exploration. But I think we should be able to get a better idea about the same in the coming 1 or 2 months.
Right. And the capacity that you mentioned is 5.5 lakh cubic meter current capacity. Okay, that is for, 24/7 working, or it is for, one shift?
No, that is for 24 hours working.
Okay, 24 hours. So there is no chance that we can increase our sales, production, rather, I would say.
No, this is the highest that we can achieve probably in terms of capacity utilization.
Right. And what would be the percentage of power consumption as percentage to our sales, or maybe to cost? Power consumption?
Sorry?
Power consumption. What is the power consumption cost? Okay, so producing all these finished products. So that I was directing towards having some solar plant or anything, or our own plant, so that we can reduce on our energy cost.
So on an average, the daily power consumption at one unit is almost 3,000 to 4,500 units every day. Okay. So the power cost is not a lot, to be very frank. The energy cost is high in terms of utilization of coal, because we are using a boiler for autoclaving the AAC blocks.
Okay, those are steam cured, or?
It is steam cured.
Steam cured. And how much time does it take to get cured?
Almost 11 to 12 hours.
11 to 12 hours. So do we have any plan of going for gas or anything? Then I think it would be cheaper, no?
No, actually, to run a boiler, we are using coal, and the other material that we are using is lignite.
Okay.
But for boiler, gas is not workable, because that might again increase the cost. And for running a boiler, I think lignite is the cheapest source, but again, that is available only in limited quantities.
Right. Okay, got it, sir. Thank you.
Thank you.
Thank you, sir. Next question comes from Utkarsh Somaiya, an individual investor. Please go ahead. Utkarsh Somaiya, an individual investor. Please go ahead. The participant had withdrawn the question. I'm moving on to the next question. Next question comes from Mukesh Kotari, an individual investor. Please go ahead.
Yeah, hi. Thanks once again. Just to understand from the long-term dynamics perspective, if you look in the past, concrete mixers were touted to be a big thing because of the way the whole ease of construction happens. I mean, in Western, it is almost 80% which is used by concrete mixer, and in India, it still continues. It's the other way around. I mean, very small percentage is used to concrete mixer. Problems because of logistic reasons, end mile connectivity, and all that. Do you see a similar challenge with your product as well? I mean, while comparing with red bricks market and the potential market to take over might be huge, because of logistic reasons and because of other reasons, despite being a good business case, like concrete mixer didn't grow. So same way, do you think a similar problem will be there for AAC as well?
Frankly, we don't anticipate any such issues for our industry looking at our current locations, because we have ideally strategically installed our plants at such locations that our transport and logistic cost does not go up drastically. Because as I mentioned that there are two major transport elements. One of them is getting the raw material to the factory, which is mainly fly ash, which is a free of cost material. So for both our units, fly ash is located at a distance of almost 50 to 60 kilometers, and abundant quantities are available at both the thermal power plants, whether it's Adani thermal power plant or the Vanakbori thermal power plant. And secondly, we see that outward movement of goods. So for the Umargaon factory, we are selling material to Bombay, Navi Mumbai, which is at a distance of almost 140-50 kilometers on an average, as well as to Vapi, Silvassa, which is our local market at a distance of 20-30-40 kilometers, and Pune, which is again a very big market at a distance of almost 200-250 kilometers. So we have three markets from this region, and for the Ahmedabad plant as well, we have Ahmedabad at a distance of almost 50-60 kilometers, Baroda at a distance of 80 kilometers or so, and plus we have some regions of Rajasthan as well, markets of Indore, as well as lots of small villages and towns like Jhabua, Alirajpur, everything which is at a distance of almost 250-300 kilometers. So we have good markets under both our plants, and looking at those things, we don't see that logistics will turn out to be a very big challenge for us.
Okay, or let me put the question differently, frame the question differently. Today for large projects, builders tend to, put up on their side itself a batching plant and concrete mixer and stuff like that. So is there a possibility that even for your products, similarly for large projects I'm asking, a small plant can be put up an AAC block, even for hollow block, similar thing happens. Can AAC also be manufactured like that, on site for a customer requirement?
Frankly speaking, AAC blocks cannot be manufactured like that because the cost viability and everything, the overheads and everything will be very high. And, for one AAC block plant, if we want to install a 250,000 cubic meter plant, the minimum land area required would be 5 to 6 acres.
Okay.
And getting such land at where someone is doing a residential construction, the cost and everything of the land will only be phenomenally high. And getting fly ash to that particular area where there is a residential area will also turn out to be a very big challenge, because fly ash being a hazardous waste from the thermal power plant and it's powdered, so it's not a very good idea from that angle.
Understood. So logistically, given this scenario that we had just discussed about these two alternatives, AAC cannot put up a plant in the construction site. For a large project, basically running into, say, 100 acres and above.
So, frankly, earlier in the past, Lodha was developing this township in Bombay, which is by the name of Palava, which ran for almost 4 or 5 years. And they had explored this opportunity, but even they came down to the conclusion that buying blocks from the current manufacturer is better rather than installing a plant of their own.
Understood. Fine.
Yeah. Thank you.
Yeah. Fine.
Thank you, sir. That would be the last question for the day. Now, I hand over the floor to the management for the closing comments.
Well, thank you everyone for joining the conference call today. The Q3 numbers were pretty good, and similarly we are looking at good exponentials of our growth, and as suggested by all of you, we are already at our full capacity utilization, but we are looking at other aspects of growth in the upcoming years. And we look forward to any of our questions, if any, for the future. Thank you.
Thank you, sir. Ladies and gentlemen, this concludes your conference for today. Thank you for your participation and for using Doosabas conference call service. You may disconnect your lines now. Thank you and have a pleasant day.